Welcome to the Interest Rate Academy. Class is now in session. Today's topic: when will interest rates come down? Welcome to today's tutorial. Let's try to shed some light on the question on everybody's mind. The Federal Reserve has attempted to combat the inflation caused by the stimulus offered during the pandemic by enacting one of the largest and fastest hikes in interest rates in recent years. Everyone is curious now. When will interest rates start to decline again? High rates can be great when investing in money market accounts and other fixed income securities. However, it can be extremely prohibitive when it comes to borrowing money for things like a mortgage. Higher rates have made it difficult for many potential buyers to afford a home. Let's look at the following example. Someone looking to borrow $400,000 to buy a home 2 years ago would have been able to get a mortgage around 3.5%. Possibly even lower. That same mortgage at the end of 2023 would have a rate of around 7.5%. As you can see in the payments, that is over a $1,000 increase in your monthly mortgage payment. So, when are interest rates coming down? As a former trader, when I want to look into the future, I turn to the futures markets. More specifically, when it comes to speculating on the Fed's next moves, I like to examine the Federal Funds Futures market. Federal Funds Futures are a derivative financial instrument that allows for the hedging and speculation of short-term interest rate risk. Federal Funds Futures give an accurate representation of futures traders' perceptions of how the Federal Reserve will implement its monetary policy going forward. Simply put, it is where traders can bet on the Fed's next move regarding the federal funds rate. Let's examine a recent quote from a Federal Funds Futures contract. As you can see, the quote is a dollar price of 94.705. To get the implied future interest rate, you subtract the quoted value of 94.705 from 100. This gives you an implied future rate of 5.29. Once you have the implied future federal funds rate, you compare that to the current level of where federal funds are trading, also known as the effective federal funds rate, or EFFR. The New York Fed posts the effective federal funds rate for the previous business day on its website. It is comprised of the volume-weighted median of their overnight federal funds transactions on a given date. Notice some of the recent results below. We see that the recent median federal funds transactions have been posting at 5.33%, very close to their implied future rate of 5.29%. So, with an effective funds rate of 5.33% and an implied futures rate of 5.29 from the December contract, the chance of any action by the Fed at their December meeting is unlikely. This is due to the current rate and their implied future rate being so close to each other. The key takeaway from the previous slide is that being able to compare an implied future rate to a current rate allows us to assess the probability of a rate change. Now, let's look at a real-life example and walk through the basic math. Let's go back to the Fed Funds Futures quotes and look a little further out on the calendar. Pulling up the quote for May of 2024, we see the price is quoted at 94.81. If we subtract that price from 100, we get an implied future rate of 5.19. We also know that the current effective federal funds rate is 5.33. The first takeaway from this futures traders are betting that rates will be lower by May of 2024. Now, let's look at how to calculate the probability. Now, let's look at the basic math. The first additional piece of information we need is the expected rate of change. And since the Fed moves in 25 basis point increments, we now have that number. The equation is as follows. You take the implied future rate minus the current rate and divide that number by the expected rate of change. So, using our numbers, you take the absolute value of 5.19 minus 5.33, which is 0.14, and divide that by 0.25. This tells us that traders give a 56% probability that the market thinks the Fed will lower rates by 25 basis points at their May FOMC meeting. There are other variables that go into futures pricing models, but this gives you a basic introduction to the math. Now that the math is in the rearview mirror, let's review the question you came here to get answered. When will interest rates come down? We know the futures market can shed some light on the probability of rate changes. So, let's go back and look at the futures market for 2024 and see what they tell us that the future holds in store for interest rates. Using federal funds futures, I updated a chart I follow to keep track of the probability of Fed action at their FOMC meetings. Below is my latest update as of November 28, 2024. The yellow column is our current target range. The first thing to notice is that the columns to the right of the yellow columns show a very low probability that the Fed raises rates again. The second thing to notice is the columns to the left of the yellow column. Those numbers start to move up quickly, beginning in March of 2024. As we get into May of 2024, probability of a Fed cut increased to better that of 50%, and by June of 2024 the likelihood of a cut goes north of 85%. Note that there are probabilities below the 4.75% target in June that are not included in this chart. Okay, now that you have the data from the previous slide, I believe the Fed will cut interest rates by June of 2024, possibly even May of 2024. This is assuming that we do not see upside surprises in economic growth or inflation. Another thing to consider: traders are forward-looking. I would expect to see them placing their bets prior to a Fed move. I think you may see a downward trend in rates beginning in April before any Fed action. I will be closely monitoring the interest rate markets and providing email updates on these forecasts. If you would like to receive them, please leave your email in the comment section, and I will be sure to add you to the distribution list. I hope you enjoyed this presentation. Thanks for joining us today. Remember, the more you learn about interest rates and other financial markets, the better you'll be at navigating the complex world of money and investing. Until next time, don't forget to hit that like button and subscribe to stay updated with the latest in finance. Feel free to share with anyone you feel would find this video informative. The Interest Rate Academy is produced by Chuck Borjoli, a 30-year veteran of the credit and interest rate markets. Have a great day.